traders at UBA expect the short end of the bond curve to remain in demand. For the T-bills market, a bearish bias is expected early next week as investors adopt a cautious stance due to the expected 177 billion naira T-bills auction. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market updates. Chuka, thank you so much for joining us on the show today. Let's do a market wrap, the highlights of this week's performance, both on the T-bills and bond side.
Okay, thank you, David. System liquidity opened negative, about 30 billion. But through the week, we saw that tightness reduce due to inflows from coupon payment. Well over 134 billion came into the market, and that kind of like brought a sign of relief to the liquidity situation. On the T-bill side, we've seen interest, especially on the 1-year bill. This was the bill that came out at 12.87 at the last 12.98 at the last auction. It's currently trading around 11 levels. This is also due to demand of these papers in the secondary market. On the bond side, we've seen interest, especially on the shorter end of the curve. The 2026 and 2027. This is because it's more attractive to buy this short-end bond at 13% levels rather than buying buying the 1-year T-bills, which is trading lower. This also has to do with the fact that this bond also has the interest in this bond is quite huge due to the coupon levels. 2027 has a coupon of about 16%. So the attraction is really on the shorter end of the curve for the bond market.
No doubt the attraction is on the shorter end of the curve for the bond market. Now, looking into what we should expect next week, so many had their attention closely fixed on what to expect in terms of rate hikes or not. Looking at the MPC meeting, which the CBN has already postponed that. We don't necessarily know the new date that will happen. But also in focus, we're looking at next week's 177 billion naira T-bills auction. Let's talk about how expectant the market is, aside just the quiet wait-and-see approach.
Yeah, next week we see system liquidity improve, being to the end of the year, the end of the month. So we expect to see a lot of inflows, especially from the FAC. And so next week, T-bill auction will be really interesting. We expect to see rate decrease from 12.98 it traded the last time. That was 1 year, close to the last time. We expect to see decrease to probably around 11.5, and this is because of liquidity coming in, and then obviously we expect to see oversubscription in the next at the next NTB auction.
Okay, now, and talking about liquidity in the market now, what's your take on how the market is going to fare going forward?
The thing about the liquidity in the market is that this minute the system is highly liquid, and then you see rate drop to almost like 2.5% or 3%. In next minute, the liquidity thins out, and now we see rate as high as 24%. But with what is with the expectation of the FAC next week, we expect to see system liquidity improve. Probably might see system liquidity around 400 to 600 billion, and that will greatly improve trading, especially on the T-bill side.
Chuka, thank you so much for your time on the show today, and to have a wonderful weekend. That is Chuka Nwachukwu, head of ALM and balance sheet management at UBA.